Hi, everyone, and welcome to this month's edition of your Daily Five. I am your host, Mish Schneider, and the market, as you know, has been extremely volatile. We had a major sell-off coming into this year, really starting actually for many instruments in the fall of 2021. And then there's been kind of a point of where it held the February lows in the most recent dump. We started to see a lot of buying coming into a lot of markets as investors are looking for bargains. But the question is, was this just a bear market rally or a dead cat bounce, or are we going much lower from here? So what I thought I would do is pick 5 instruments that I thought if they had any chance of holding here, that these would be the 5 stocks that I'm watching right now. And I will fully disclose on whether or not we have positions. But we're looking at BITO, which of course is tied to Bitcoin, World Wrestling Foundation, which is tied to streaming services, Mountain Pass, which is tied to rare earth minerals, LPX, Louisiana Pacific, which is tied to transportation, and GrowGeneration, which is cannabis, all very different. So let's go to the charts. Okay, let's start with BITO. It's the Bitcoin strategy ETF, and Bitcoin has been very interesting. What I really like to say is that at 17 years old, it's actually in its adolescence, trying to figure out what it wants to be when it grows up. And so when I say that, what I really mean is Bitcoin, is it going to be a risk on or risk off asset? Is it going to be a hedge against inflation? Is it going to decouple from the overall market and start to outperform? What we do know is if you look at the currency itself, it actually has been consolidating in a range. And even though we've had some wild swings in the actual overall equity market, Bitcoin did not go and make new lows when, let's say, the S&P 500 more recently did. So that to me is kind of a good sign. So one of the instruments we like to look at to trade, if you're not a person who has a wallet that's trading actual cryptocurrency, is BITO or BITO. Now, I just want to get rid of here because there's too much in terms of the, there shouldn't be 2 leaderships here. So we're going to get rid of that one. And there shouldn't be 2 real motions here. So we're going to get rid of that one. And I just want to make sure that, yes, okay. Now the chart's a little bit cleaner. Now we don't have real motion for this chart because it hasn't really even been around long enough. This is a relatively new instrument. But what we do have is an idea of the leadership against the benchmark. So you can see it's still underperforming the SPY. So it's very easy to use these ACP plugins because before you really want to get involved, one of the things you want to see in the start of a potential decoupling is you want to see this actually outperform the SPY. So now if we take a look at the actual price chart here, you have your Bollinger Bands, and you can see it's kind of behaved within these Bollinger Bands, which is interesting because the green line has been support on the bottom and it's been resistance on the top. And what you have here, since it is such a new instrument, is at least a 50-day moving average. So that's kind of what we have to go on right now. So essentially what we can see is a lower low here, a little bit of a higher low here, a little bit of a higher low here, and then a higher low here, although that's not nearly as dramatic as the lows that I just showed you because we didn't quite have the same velocity of sell-off. But that's a good sign. It means that the selling is actually drying up. So with BITO right now, we are not in a position, but we are looking to enter a position on a 2-day confirmation over the 50-day moving average. And if that happens, you have choices of risk. You could go down and risk as far as, let's say, below this actual Bollinger Band at 2270, or you can take this most recent activity and go a little bit below that under 2390, somewhere I would say probably at around 2323. So our next chart here is completely different. This is World Wrestling Foundation. Now, I had actually an incredible trade in this years ago, and I haven't really traded it in a while, but it's kind of a sleeper. If we just scroll up a little bit just to get some history, you can see that we made an all-time high back here in June of 2021, came off, but as we go back out, we have kind of a nice sort of almost inverted head and shoulders. Some people like to call it a cup and handle. And what's interesting about this is just now starting to peek its head above the SPY in outperformance. And the momentum is pretty darn good. Not as high as the momentum was just as it traded a few dollars higher, but getting there. So what you don't want, of course, is a situation where you get a mean reversion where it crosses the Bollinger Band on real motion, crosses the Bollinger Band on price, and then turns down. So you got to be nimble as you have to be in this market all around. But in the meanwhile, you do have a really good area of support right where this dip was, close to the 50-day moving average. And so what would I do right now? If the market gets a little bit heavy again, which is entirely possible, I would probably want to see a little bit of a dip, maybe back down to around the 56.50 mark, where you then would have a very good tight risk to not only the 50-day moving average, but notice you had a golden cross right here. I like to trade these crosses, death crosses and golden crosses, when the price is as close to the moving average as you can. Otherwise, they're not a very good timing mechanism. But nonetheless, if we do get any kind of retracement down closer, then you have a very low risk. On the flip side, if we can get a close over the 60.51, where we clear this Bollinger Band so we don't have the risk of a mean reversion trade, then you're looking at a much more active trade where you can then use a risk to, let's say, under this low right here, which is under 58. So you would be buying it over 60.50, risking to 58. The next one is MP. I've talked about this stock a lot. It's been trading in a range and very choppy along with the market. Again, some perspective, you can see we've been, every time we get up to these levels, we sell off. Which means, again, two ways to trade this stock. We are showing leadership for sure, and the momentum has certainly cleared back over, but still not nearly as strong as it needs to be. And look at that, we got right up to the Bollinger Band and we're selling off. So here's what you have to do with this one. You either have to wait for the dips. These dips get bought. In this case, if we can get anywhere closer back to 42, between 40 and 42, then you have a good risk to under the 200-day moving average. But since you can see, if I show you this again, every time we've gotten back up here around 51 to 53, we can't go any higher. So that could mean that with a day we eventually break out over that area. You just close your eyes and you get long. The next one is LPX, and I put this one in here because you've had transportation now showing relative strength compared to the rest of my economic modern family. And a stock like JB Hunt, which I actually featured to you, has gone up, but that has a much higher risk. So here I want to look at LPX, which is Louisiana Pacific. Now, in spite of war, in spite of everything else that's gone on, inflation, etc., goods are moving in the country, and in this country in particular. And that's been one of the bright spots. But what you can see right here is that we have a sloping 50-day moving average we've cleared. The momentum is still not as strong as I'd like it to be. I'd like it to get a little bit higher, and it is outperforming the SPY, but again, running into some resistance. But I would keep my eye on this. This is another one where I'd like to buy a dip closer to the 50-day moving average, where you kind of know you're right or wrong instantly. Or similar to what I said about MP, at this point, let it clear 74.50 to 75. Then you can risk down to the 50 and see what she got. The last one is completely different than everything I just showed you, because this is really a bottom type of play, and this is GrowGeneration. I've been watching cannabis forever, and I've watched cannabis go down, 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 down. However, if you look at this 50-day moving average, we had one close above it here back in November, and really kind of eked out a close the second day, and then boom, another sell-off. So we really have not been, you see 2 days over the 50-day moving average back here, in August, and then boom. So the 50-day moving average is reliable to a point. So we need to have two different areas to clear besides the 50. So we're certainly getting the second day close over the 50. But if you take a look at this high right here, 920, what that tells me with GrowGeneration is that if this closes over 920, and it could be today, or it could be next week, then I would be so inclined to get into a stock like this. And I would probably not want to risk all the way down to the lows, but I would say maybe under this low right here, maybe about under 8. So you'd risk about $1.20 to see what this has. So now you have things that we're waiting for more momentum, things that just need a simple correction, and things that could be bottoming with a lot of potential for the upside because they've been beat up for so long, and they could be relatively inflation proof, as in the cannabis space. Okay, that's it for now. Thanks so much for watching. Hope you all have a great weekend.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.